I just opened my VIP group. In this free VIP group, you can see what cryptocurrencies I buy and sell. Join for free via the link below this video. Hi everybody. In this video, I'm going to show you guys an amazing 5-minute scalping trading strategy using the new trading indicator by Lux Algo called the smart money concept. This concept is fairly new, yet widely used amongst price action traders looking to more accurately navigate liquidity and find more optimal points of interest in the market. So in this video, I will demonstrate a strategy with this indicator that you can use today and make huge profits. This strategy works on all markets, including crypto, stocks, and forex. In terms of time frames, it works best on a 5-minute chart. Before we start, nothing in this video is financial advice. It's all for informational purposes only. So this is what your chart is going to look like when we're done setting up our indicators. So I'll cross these out so that I can explain everything from the beginning. So in order to build our setup, we first need to click on the Indicators tab and search for the first indicator, which is called the Smart Money Concepts. It's going to be this indicator by Lux Algo. This all-in-one indicator displays real-time market structure, order blocks premium and discount zones, equal highs and lows, and much more. This indicator is similar to the fair value gap script. However, it does have much more features. As we can see, this tool prints different types of labels. So first of all, we have the ERCEHOCH, which stands for change of character. This label is printed when the price action is changing its overall trend direction. The change of character can be bearish or bullish. So for example, the price action was moving in an uptrend, and then a strong bearish candlestick occurred that broke below the most recent level of support. This is definitely a sign that the trend is about to reverse, so the indicator printed a change of character label. When the price action is making equal lows and equal highs, the indicator will also spot that. This is very helpful because it indicates the range in the market. The next very important label we need to know is the break of structure. Depending on a label scholar, the breakup structure can be bearish or bullish, and this is going to be our ultimate signal to enter a buy or a sell position. The break of structure is also an indication that the market continues to move in the same direction. So the indicator basically works like this. When the price action is making the first lower low, the change of character label will be printed. And every time the price action is making a new lower low, the break of structure label appears on a chart. We also have bullish and bearish fair value gaps. These levels can be used for support and resistance, and they also can be used to eliminate a lot of potential losing trades. For example, the indicator spotted a bearish breakup structure, which is a signal to go short. But if the entry price is very close to the level of support, the probability of the price action rejecting off of this level and hitting a stop loss is very high. Now, you know how this script works, so let's add 2 more indicators to the chart to complete the setup. So the first indicator we're going to need is the EMA, add the moving average exponential. Now in settings, we're going to set its length at 200. For the second indicator, we will need to search for the volume spread for Visa and add this one. We're going to leave its settings on default. Now that our chart is complete, let's go through the rules for this strategy. So these are the conditions for entering buy trades. First, the price action must be closed above the EMA. Second, the indicator must print a bullish break of structure label. This is a sign that the price action broke above the most recent swing high. Third, the indicator must also spot a new bullish fair value gap. And finally, at the time the price action makes a breakout, the volume in the market must be high, and for that, it needs to be either red or yellow. As all the rules are confirmed here, we'll get into this trade at this candle. The stop loss will be set slightly below the most recent fair value gap, and we'll use a take profit target of 1.5 risk to reward, and as you can see, this would have been a profitable trade. Now, let's take a look at the conditions for entering a sell trade. First, the price action must be positioned below the 200 EMA, as this is a strong indication that the market is in a downtrend. Second, the bearish break of structure label must be printed on a chart, as we already know this happens when the price action is making a new lower low. Third, after the break of structure, a new bearish fair value gap must occur in the market. And finally, the volume spread should be colored in either yellow or red, as we know this is an indication that the volume in the market is increased. So we're going to go ahead and open a sell position at the close of this candlestick, and the stop loss will be placed slightly above the fair value gap. And the take profit target will be set at 1.5 times the risk, and this trade would have ended in a profit. This strategy can be beneficial if you stay patient and only enter when all the rules for a buy or sell trade are confirmed. Now, let's go through one more example of a buy and sell trade. Here's another example of a sell position. We see the price action just closed below the EMA. The indicator issued a new sell signal, and a new bearish fair value gap is present. Moreover, the volume is pretty high. So, we'll get into this trade and set our stop loss right here. And for a risk to reward ratio of 1.5, this trade would have ended in a profit. Sometimes, the profit target can be at the most recent level of support, but as long as it does not exceed it, we can still enter the position. Here's another example of a buy trade. We see the market just crossed above the EMA. The indicator printed a bullish break of structure label. A new bullish fair value gap has been identified, and at the time, the price action forms a new higher high. The volume in the market is increased, so we'll enter this trade. Set our stop loss right here. And this also would have been a successful trade. Now, of course, no strategy will give you a 100% profit rate, so make sure you test this strategy before using it. So that's it for this strategy. If you liked this video, make sure to hit the like button, subscribe to my channel, and hit the bell. Thanks for watching till the end, and I'll see you guys on the next video.